All righty, welcome everybody. It is Tuesday, March 18th, 2025. Let's jump into it. Today, we got the markets down a bit on the session, down 76 points now, 73 on the S&P. And I'll share my screen. We'll take a look at it. We'll see what opportunities are out there. We'll take a look at the accounts. We'll answer any questions that you have. I'll spend the hour trading here and coming up with a little bit of a game plan of what you want to do moving forward, depending on how things are going out there. So let's share some screens. And we'll jump into the current market quickly here. I'll get myself off of the screen as well. Perfect. All right, let's rock and roll. Here. Well, we gapped down. So you can see here. So this is the daily chart, intraday chart, I should say. 15-minute on the left and the 3-minute on the right hand side here. Gap down. You can see here right at the open on the session, and been a sell-off ever since. Just a slow grinding down. So it's maybe just another one of those grind down days. I don't know that there's anything exciting going on, but you get a grind down market. Now, we did gap down. You've got the 21 headed to the 50. They're all headed lower. 21 could break the 50 here on the 15-minute. You're at the white line is, let's make this a little bit thicker. It should be a thicker line. So I'm going to leave it alone. So the white line here is your 3 ATR. The green is your Bollinger Band. So it's a pretty typical Bollinger Band. Let's get the basis off. Shouldn't be on. Anyway. So there's your Bollinger Band. So we were down at the bottom of the Bollinger Band earlier, but when the 3 ATR and the Bollinger Band are heading down at like a 45-degree angle, there's nothing to bounce off of. You can simply just ride those down. We had a nice little bounce for about a 15-minute span here and then just rolled over. But on the day, if we do look here, the MACD has been trying to, curl up and turn over for the last 45 minutes, while RSI continues to just hold down here at these lows. So RSI at the lows of the session, oversold territory, sitting at 27.92 right now. Stochastic momentum at the lows of the session. So everything at the lows. We're a bit overextended on the downside. Doesn't mean we can't stay overextended. To the downside, the expected move today was 40 points. We're now down 70 points. So we're not quite down 2x the expected move, but we are extremely past the expected move of the day. Question, did I do a 0DT today? I absolutely did. Today, I did put a put credit spread on, which is pretty much just flat right now. So we're sitting at the lows of the day, and it's flat. So we'll see what happens here. Good premiums on the session, but things are just things are selling off on here on the daily chart. The 3-minute, nothing different going on here, except the fact that you are oversold on stochastic momentum. The MACD momentum's heading down, and the RSI is right near the oversold levels of the day. It just can't seem to get any momentum going. There's really no major news out there on the session. If we take a quick look here, the Atlanta Fed, talking about GDP slowing to minus 1.8 versus a minus 2.1. I guess it's less, not slowing, but it's slowing less than they expected. But really, there's nothing else out there on the news front. You've got some goings on in the Middle East, which continues to be just the usual stuff happening, with Israel, Gaza Strip. You got the U.S. attacking the Houthi rebels and terrorists out there. Really nothing major along those lines. It's kind of I hate to say it's a normal occurrence, but there's really nothing crazy with that. Uh, the Houthis always are causing problems with shipping, and they need to be dealt with. So you got that going on out there. Let's switch to the daily, weekly chart here. We are still sitting on the weekly chart over here. Right at the 50-day moving average. We did break it substantially last week. We tried the reverse higher. Now, this is a pretty nice looking reversal candle, but we've had no follow through thus this week on that move to the upside. So it wasn't a green candle, it was a red candle. So we did finish not near our highs, but it's a decent looking potential reversal candle. But we really, not getting a ton of follow through this week, just kind of meager. The downtrend still exists here on the weekly chart. I don't think you can peg 200-day, 50 days. I don't think any of those are really helpful on down moves. We're looking for some sort of support levels. We're really not at one here. We're in what I think is just no man's land here, and we're definitely in this downtrend. You can see the trend line here. I just don't think there's any reason uh, to think that this doesn't just roll over here, but we're right at the trend line. If we get and we hit it today and are bouncing off it, there's just no reason for me to be ultra bullish in here and try calling any kind of bottoms or any of that. I'm nibbling on the way down here, but I'm not going to get all in and go long at this point in time. There's just too much ahead. I mean, we're still below the 200-day moving average, which is not great. Like I said, you don't typically bounce off of one of those on a serious downtrend. You can get these pretty nice, strongly bearish or bullish rallies in a bit of a bearish market, which we are in right now. So the trend is down on the daily and the weekly. The PSAR is negative on the weekly. It has flipped positive on the daily. So you can see two dots. So yesterday we flipped positive on that. So maybe we'll hold on here, but uh, I just think any bounces here are skeptical until we, uh, consolidate a little bit more sideways. All right, so there's the ES. Do I think there's anything, um, that for trading purposes here? Sure. I still think that like at the money 112 trades are not bad. I don't think that strangles are all that bad in here either. I think we can still break a little higher. I think we can come back down. I would be okay with popping some strangles on. We do have a strangle on in ES right now. The thing's down 38%, not down terribly. So nothing to do despite this pretty substantial downtrend. VIX is still elevated. So let's take a quick look at some of these things. You know what? Let's not look at them here. Let's look at them on a daily chart here. And let's start with VIX. So the VIX is elevated. If we go out and look here, we've had these spikes, normalize, a little bit of a spike, normalize, spikes, normalize. And this is a daily chart. So you can see these things take a week or two to normalize. Typically, some can take 1 week, some can take maybe 2 weeks, depending on how slow we went up. So how fast we go up determines kind of how fast we go down. We're still elevated. We took a while to get up here, so we'll probably take a while to get down here. But the momentum is definitely down on the VIX. We're off of our highs, but we're still elevated enough to give us, I think, just nice opportunities at premium if you find good trades out there. And I think the at the money 111s or 112s and strangles, I still think these are good plays in here with some elevated VIX. Uh, I don't really care about, I'm not big on the futures and the, contango and all of that. It really doesn't affect my trading. I'm not going to change my plan based upon the VIX term structure. So It's nice to know. I think this chart is nice to look at, but I don't think it does a whole lot of anything for you except tell you that, okay, VIX is elevated and it normally reverts. We've seen a bit of a top and we're starting to cool off here. Other than that, I don't really care. Uh, on it, and I'm not going to get into too much more on that. I'm just looking at just different things out there to give me a sense of what's happening in the market. I think one thing that's interesting here is the percent of stocks above their 50-day moving average had dropped to a low of 2187. We haven't seen that low since back in 2023 of October, where we had a pretty good uh, rally. I mean, it had sold off uh, in here during 2022 a bit, but let's just go back to here. These are good opportunities to potentially nibble away at things when the percent of stocks above their 50-day moving average gets down, I think, below, the 30 mark on it. If it gets above the 70 mark, I think you've got to consider uh, lightening up. When it gets down here, I think you can consider taking a look at positions that are out there. I think this isn't an all clear, but it's more bullish down here than bearish for nibbling on some things in my opinion. So I think that's interesting. If we look at the inflation rate, which is the blue line here, ignoring the any of the moving averages on here, the inflation rate. Inflation has just been dropping. We're at 2.8 now. We were as high as 9 up here, but inflation rate has just been dropping since 2022. Uh, and we can extend this thing out a bit more as we look at this, but inflation has been coming down recently. So for the last year, inflation has, it came down. We got a little bit of a bump. It's coming back down again. So inflation not driving its way higher right now. So inflation not a big problem. We have a Fed meeting tomorrow. If we're looking at what the Fed's going to do, well, it's a pretty dead certain that the Fed's going to do nothing tomorrow. If we look out to May, you've got maybe a 20% chance that the Fed cuts in May. You got to go out to June to see that we have at least a 50% cut in May. So right now, I think you're looking at the June meeting of the Fed being at about a 53% chance of one cut in June. If we look out in July, we've got now a much stronger, almost a 76% chance of at least some sort of a cut. There's even some odds that you could get two cuts from here, but you're closer to a 70% chance that there's at least one cut by July. And if we go all the way out to the end of the year here, there's a 96% chance that there's at least one cut, and you're looking at a 81% chance or about an 80% chance of at least two cuts uh, for the year. So we'll see what the Fed has to say, but right now it's telegraphed in here that there's probably no cut till June, okay, unless something changes. So I don't see anything changing really in May, but there's a 20% chance of the May cut. But I think June's what you're targeting. And then maybe July, you start to talk about, two cuts, which is probably more prevalent here in September. Not a huge amount. And then October, May and December, maybe chances of a little bit more on the cut side. Here's a pretty interesting thing. I don't know if anybody subscribes to the earnings insight on FactSet, but I always find this a little interesting of a chart. I have posted it in and I'm not checking chat right now, but I'll get in. I'll take a look at chat. All right, so this is an interesting chart, but I like I take a look at this. This is the change in the forward 12-month earnings per share versus the change in price on the S&P 500. Well, the blue is the price, and then the black line is the forward earnings per share. You can see that we've had a pretty good run really from back here in late 2022 after the 2022 bit of a bear market, and then we've rocketed significantly higher on the S&P. But we seem to correct to this line. Okay, if you're over it, if we're under the line, we correct back up to it. Either earnings come down and the market comes up to meet it, or the market comes down and earnings are rising to meet it. Well, earnings are still rising, which is a really good sign. We've been above this line since really the end of 2023. So all of 2024, we went a little bananas. Okay, so 2023 and 2024, big years, but we're getting more disconnected from uh, the growth of the earnings here. So earnings growth, it's steadily climbing, which is just a great sign. We don't see contraction of earnings like we did in here for a bit of 2022. Earnings are still growing at a nice pace. It's just that the market got so far ahead. Well, now we've corrected, and now the gap is much closer. It's the closest gap we've had in about a year or so, which is good to see. Now, if earnings continue to grow, and we got earnings coming up, and the market continues to move sideways to lower, we're going to meet somewhere, I think, around this 5,000 mark in the S&P. So am I saying that the S&P is going down to 5,000? I'm not exactly saying that, but it would not surprise me to see us continue to come down. That's where I think we would be fairly valued. And anything from there, I think, is a good opportunity for the market. Now, for the earnings growth to get there, I mean, this is like a year. For it to get up to that point is probably, 2 to 3 months from now. Uh, I'm not expecting, selling for 2 to 3 months, but if we get some more weakness in here, I just think it's nice to see us coming back down to overvalued. So I thought it was interesting to see and talk about that particular chart. If we look at the put call ratio as well here, it's been on a strong move to the upside. When it's rising, the 10-day moving average, which is the white line, and then the trend, I put those in the blue trend lines. When it's rising and the 10 days moving higher, the market's typically moving lower. It's starting to roll over here. Now, it doesn't mean that it can't roll over and then go back higher, but it's at a little bit of an extended period. It's the highest overextended it's been since back here on September of last year, where we came down, rose, and then we fell a little bit further, and the market went on a pretty nice run. So every time this thing rolls over and starts to head lower, the market goes on a pretty good run from these overdone levels. All of these things are good for the market. I think we're readjusting the values of the companies in the S&P, which I think is a positive. So I think the pullback's needed. We were overvalued by way too much. If you look at that one chart, and I think we were 10 to 20% overvalued. Now we're maybe 10% overvalued on some of these companies overall. I think I'm not saying the lows are in, but this is not a bad spot for us to potentially find some continued footing. And then we're heading into, so I'll take this off. And then we're heading into, I'll take this one off as well. Let's get back to uh, the S&P. But I think we're heading into that April tariff news of what reciprocal tariffs are going to come out in April. And I think the market's going to be skittish until then. I don't know that the Fed's going to say much of anything tomorrow. I don't expect the Fed to do anything tomorrow. I don't expect them to cut. The language will be more important. What do they say? Do they signal that they may cut? That could be good for the market, because if they start to cut, rates come down. Rates coming down, good for the market. Overall, higher rates are not great for the market here. We'll see what the Fed has to say. But I think there's some nervousness there. We've had 2 strong days of up, so today's not a real big shock. We're only retracing a little bit um, on it. But I think I think we wait till, for 2 more weeks, and I think we see what happens at the beginning of April. Does that, do we get a little bit of a come down for a couple of weeks? And if we look at the weekly chart, or is just some sideways maneuvering here below the Bollinger Band? Everything's telling you that things are a little bit oversold right now. Um, and I think you just start to, edge your way in. And I think you could still see some more volatility, but I don't think it's the worst spot to pop some trades. All right. So there's a little bit of the market overall, a little bit of everything for you there. And let's just jump into what are we seeing today. So we are down on the ES today. I don't know why TradingView is saying it down 17. The price is right, but we're down 68, not 15. But anyway, that's neither here nor there. The charts are right. The numbers, the aggregates, right? The what we're up and down is off a bit. But we're oversold and trying to get a little bit of a bounce in here. I think you just meander sideways in here. I think things are not bad, but the 21 is getting further from the 50, and we get the 200 day here. Um, yeah, maybe it's their role, but I don't know. We'll see on it. Maybe that's what it was, the contract rolling. But price is right. We're all good. And yeah, so at the money, 111 trades, strangles, I think not bad opportunity. Let's take a quick look at oil. Oil starting to break out of the downtrend, not by moving higher, but just by letting time and more just sideways consolidation sideways. Now you've got U.S. attacking the Houthi rebels, which are backed by Iran. U.S. may do something with Iran. Who knows? I don't know. Word was we sank one of their spy ships yesterday as well. It's another day in paradise. Attacking some rebels, sinking some spy ships, all that's good. Uh, I think this is just keeping things elevated a bit in here. Israel back at attacking, bombing places on the Gaza Strip. Uh, all of that just keeping oil elevated. Otherwise, I still think the downtrend continues. I like the consolidation here. I would still be looking to add trades in here. I think strangles and just standard 112 trades just keep working. I think you just keep working those trades. I think you could, even if we have a little bit more of a dip, I don't know that a put credit spread's my thing. I want to give myself more room to make some money on the downside because I just don't see outside of something in the Middle East heating back up. I just don't see big catalysts for us to want to rocket higher. Uh, Here, the weekly's weak. The daily is consolidating sideways. There's a bit of a support zone in here that as you can see, that we've been at. So we're right in this support, right around 67 ish or so, 66, 67. This is all a nice little support area for now. I think it's perfect. I think it helps us out a lot. And we added a new strangle this week. We've got an old strangle on, which is pretty much flat. The new strangle is pretty much flat. Uh, Nothing going on oil. Gold. All right, gold's been on a tear. I tried to get the gold trade on yesterday. It did not get filled. I'm not sure why, but that's gold for you. So gold is definitely bullish. I think a jade lizard here was the best opportunity trade uh, for us. It's continuing to move higher. I think a broken wing butterfly would also be something to take a look at. It's getting overextended, could still continue upside here. I think selling puts is not the best strategy in here. I think you got to have something that gives you a little bit more of a trap to the downside if we do get a pullback, and then gives you unlimited risk to the upside. So 112 trade would be ideal. They don't really work well on gold. They don't set up well on gold. So a jade lizard might be the best trade opportunity. We'll model something out and see what we can come up with. I had a trade on yesterday, just didn't fill. I wish I'd gotten filled. We'd be in good shape. We might look to do it again today, so I could take a look at that gold trade, but I don't really want to put on a whole lot of anything. And then bonds, just sideways trending. Gonna take some of this anchored VWAPs off. We're in this anchored VWAP pinch area from the lows here in January all the way to these highs way back up here, September of last year. Uh, if you look at those levels, we're right in the dead center of that. So being pinched in here was what I'm calling it on the VWAP pinch, but still in this uptrend, consolidating here. I think ZB sets itself up nicely for strangles. I think it also sets itself up for 112s in here. I think both of those trades are excellent trades on ZB right here. So, a couple good opportunities. I think the trade, copper off to the races to the upside, nothing to trade for me. There's silver off to the races to the upside, nothing to trade for me right now. The Nasdaq down here trying to put in some bottoming action below the 200 doesn't look great. Nothing. I just don't think I would put on anything in the Nasdaq here. I think the Russell is interesting. So we had two nice days up. Okay, we're well below the 200. This thing is really oversold on the daily, getting to oversold on the weekly, right at the 200 day on the weekly, which doesn't happen very often. This thing's pretty oversold, but I don't know that I have a lot of hope that this thing's going to recover. So we're going to stay away from that trade for now. Nice move to the upside. We talked about this a couple of days ago when somebody asked about it. You were in this symmetrical triangle while it broke to the upside, which is why you kind of want to hold off just a tad on that symmetrical triangle. You're in the uptrend right now, so we're in the throes of this uptrending move. We can probably even clean this up a little bit better on this uptrend here on the Aussie dollar. I don't think it's a bad strangle. So if you were looking to strangle it, I think strangles set up really well on the Aussie dollar here. Despite the breakout, pulling back a bit here, I think the Aussie dollar is a nice opportunity for a potential strangle. All right. And then if we also look at the euro, it is not, in my opinion, a good strangle setup. Moving to the upside, nothing for me to do on this overdone completely. All right, quick look at some stocks. Getting hammered pretty good today. Amazon, which is probably one of my favorites in here, back down to this support level that we had that seems to be a decent support level. Bouncing off of it intraday today, it just keeps meandering its way sideways and down here. I think it's a bit overdone. I think it's a good opportunity in here where it is now. Can it go lower? Yeah, I think it can go a little bit lower than this, but I like Amazon in here, and I did put on a trade yesterday on Amazon. And I put on a put credit spread in Amazon. On it today, we flipped to a bearish PSAR. Today, the better day. So if you didn't do it yesterday, I think today's an excellent day. To do that, I'm still good on Amazon. Meta having a difficult day today, breaking through some of this support level, heading to its 200-day moving average. Pretty interesting opportunity, I think, on Meta here. I'm not trading it, but I like Meta, well, where it is. All right. Downtrend for NVIDIA. Been hitting this channel. Let's duplicate this channel. Move it down here. So you've got NVIDIA in this channel to the bottom, to the top, rolling over a bit. It looked like it wanted to make its way higher, and it did. Now it hit its 21 day. Couldn't make it to the 200. Still below the 200. Still not great. I don't think you want to get ultra long on this thing. We have a jade lizard that is up 87% with 3 days to go. I think another jade lizard in Nvidia is um, not a bad trade. So we did like a two wide on the calls. We'll take a look at this today as well. Another potential jade lizard on Nvidia in here. Tesla down here at support. There's a lot of lines on Tesla. It doesn't want to adhere to any of these. It's just continuing to sail away to the downside. Uh, and not only is it heading lower, but it keeps having additional uh, worse trend lines um, picking up. So not only is the primary trend down, the secondary trend is down, okay, and now you could potentially even add another tertiary, downtrend from here that's even steeper. So until you start to break, first this one, the tertiary, the secondary, and then you've got to go all the way up here to get to the primary on this thing. Doesn't look good. Maybe this is a bit of a support level in here, but you've now essentially trying to fill this gap from back here. UOPs are no help anymore on this thing. You've broken the uptrend on this thing. There's just no good anything. It's so bad it doesn't even fit on the screen right now, just to even see how bad it's doing. Tesla, just not a great opportunity in here on Tesla. I nibbled a little bit about a month ago. Obviously, those trades are down. I'm not adding any more. Uh, but yeah, it is definitely a falling knife. I think you're going to get a fantastic deal on this thing. It's going to move higher. Okay? It's just a matter of when. If Optimus and Robotaxi and all those start to come to fruition, this thing will definitely rocket higher. You're going to get a good deal on it. Uh, I've got trades in around the 200 to 190 level on this thing. It's possible that we could be getting to those levels. Nothing to do. I don't love Microsoft here. I think Google getting just hammered today. Again, another, I think, really good stock that is uh, just getting beat up pretty heavily. Trying to move sideways. This downtrend is solid. This anchored VWAP that we're at today dates back a long, long, long way. So the anchored VWAP, trying to hold on to that today. Bottom of the Bollinger Band today. Oversold, good value. I think you're getting a deal. You've now erased all of the gains since September of 2024. So we're back there, and we're really almost, if you look at it, which was, the low back here was around the 150-ish mark. That could be what it's searching for now. So we could be back to this 150. Uh, I think this is not a bad zone to be selling like the 150 naked puts on Google. I just did the put credit spread yesterday. I did the 140, 135, which is again below the 150 ish level where we bounced last time. That was also the previous pivot level. So I do like this area in here. Sold a put credit spread. We'll see how that thing hangs in there. I would be okay with assignment at the 145, so I sized it properly. I'll take the profit on the longs. I'll take assignment at the 145, and then I'll look to wheel this thing if it potentially gets assigned down there. I would like to own Google in the long-term portfolio at 145. I think that would be an outstanding price to get it at. Doesn't mean it can't go further. Uh, Here, but I do like where we are. All right, and then Palantir is struggling up and down. I still think it's overdone. Costco getting readjusted here back to a price that's not a bad spot, back to an anchored VWAP in here. This is not a bad place for Costco. if you are looking at Costco stock. And then SoFi back down to this 119. It's kind of a no man's land. I mean, right now, you look for anything that could provide you with some support levels on SoFi. And if I look at this level here, dating back a ways, this right at this 1050, maybe this 11, right at the 200 day here. I think this is not the worst place for SoFi. This stock just can't seem to get itself going, but I think it's a good company, and I think anything below $11 is a good opportunity um, on it. So there you go. There's where we are, and I think that's it. So nothing else to look at. I mean, JP Morgan, I think this is a great deal down here. I think you've got a good support level uh, in here. It just filled its gap. Uh, if we're looking, I think this probably needs to be adjusted a bit. Okay, so support bounced off of it. This is not a bad spot for JP Morgan. I think financials are in a pretty good shape here. I just think you've got a lot of stuff that's in not bad condition. All right, let's take a look at the account. Let me make a quick tweak here. And let's start off with the main trading account. Let's go through that. We'll take a look at some trades and some other opportunities today. All right, so here we go. We're in here on oil. We've got two trades already working. We just put a strangle on yesterday. Uh, so these strangles are basically flat. Um, right now, I think they're fine. Nothing to do on these strangles. We just took off a nice winning 112 trade yesterday in oil. If I was looking to do something now, I would still consider a strangle or potentially a 112 trade. You can look at a normal 112. Let's just use this, or even a 111 trade. All right, so I actually make this a 112. Right, so 112 trade in oil here. I like the 54 down here. I don't think that's bad. And you're getting 430 in the tail. So $430 using a little over $5,000 in margin is about 8.5, almost 9%. So I think this, I think this thing sets up nicely in here uh, for a potential trade. So if I was looking for trade ideas, and I'm going to post these in the charts or in the section here. So CL112 trade. I think this is not bad in here. Boom. Let's look at that. Let's look at this trade. I think this is a nice looking trade. I think this is a really nice setup right now for a trade. So I would consider something along these lines. I also said that a strangle is not the worst trade in here either. I just put one on, so I'm not going to put another one on, but I'll get, you could do the trade from yesterday still today, or actually put on a little bit of a better trade. And I don't even, oops, where am I going? I think it's still yesterday's trade, still pretty much the exact same strikes on both sides. You might be able to get a little bit farther away, but I'll use yesterday's trade as the example. So I think yesterday's strangle is still very, very, very doable here. So here's two trade ideas that I think are good. So we've got a CL strangle. Okay. So I think both those trades, not bad, not bad ideas here. ES, we're in good shape. We've got a naked put here, comes off in 10 days. It's at 74%. profit, depending on what happens in the next couple days. This thing is in good shape, so that'll be coming off. We still have nicely profitable put debit spreads. We've rolled a couple of them, so we've rolled up the short strikes to cash in some of the chips, but we still have a nice 50 wide here. We've cashed in 100 points of this 300 wide. We still have a lot of profit left in this trade. So if we continue to weaken, which we are, I think this trade really starts to pay off well. We're in the trap on this. I'm just going to I'm going to let this trade go for a bit. But if you're looking at this particular trade, you're looking at like a $12,000, 12,000. So we're 200 wide um, at a 50 multiplier. So you're really at about a $10,000 trap here. So we'll see how this thing plays out, but not too shabby of a trade. I think that was a great trade to put on. And nothing else to do with any of these other trades. The Strangles down fractionally, or 37%. Nothing to even do there. So we talked about trades in ES potentially in here. What would you do? Again, I would do an at the money 111 trade. I'm going to go out about 60 days. We're going to go something. I'm going to go narrow here, 25 wide. We can get down here. Let's just pick this one out. See how this thing shapes up. That's everything. You know what? I gotta redo it because I can't tell if Tasty gets everything out of my way or not. All right, so here I think is a nice potential trade. This is a 60-day. So this is an ES at the money 111 trade here where you've got a $500 tail, 513 bucks on 56.68. So about 9% in the tail, and then over 3 times that in the trap here, 1,760 on 55.68. This is a 32% here. So I like this one. Let's take a quick look and let's copy this, give it to the members here. Before I post it, you are, I can't really type in there. So we'll just leave it. What did we say? We were at 32% trap. And what did I say? 513 divided by 68. So about a 9% tail. Okay. So I think that's not a bad. Why go narrow? JJ, what do you mean narrow? Oh, why did I go narrow? I went narrow because I'm only doing a 111. So if I go wider, the trap gets bigger, but my tail profit goes to almost zero out here. Again, you have no risk to the upside, which is fine. Okay, but that's why I'm sticking with a 25 wide. So it still gives me some juice here in the tail, which makes it worthwhile if the market really rebounds because we're on these. And I also said in ES, strangles are not the worst thing to look at here. You could also, because you don't want any risk to the upside, we could look at some sort of a jade lizard action. Let's look at something. What did we have for the shorts on that trade we just did? I think that was like 4,800, something like that. Was that 4,800? I can't even read where we are. Yeah, it was 4,800. That might even be too low. I think 4,900 might even be better, but let's look at like a 4,900 jade lizard up here. And I'll go until I have, let's go up to six, let's go up here a bit, just right at the expected move here. And let's put this one on. Okay, so now we're looking at a jade lizard in this thing. The tail is less. Okay, but you've got the trap extends its way higher. So if you remember on the trade we just posted for everybody, uh, and let me get out of that thing. The trade we just posted, the trap ended right at the money. Well, here the trap extends a little bit beyond here. So instead of a trap at, 56.50, okay, this is a $6,000. So this trap goes 300 more points to the upside on it. So if we do get a little bit more of a bounce, then I think this trade sets itself up well. And I'm going to pop this trade in the chat, but I guess the key here is, do you want the trap at roughly what is it, 1,510 bucks on 65.11 in margin. So you're 23% trap, but the tail here is only 263 bucks on 65.11, okay, which is 4%. Okay. Not advantageous if we go up, but you've got all of this room above 6,000. Okay. So until we get to 6,000 and even a little bit outside of that, we're still going to make more than the normal. So I do like this trade in here. I think this is a really great setup, and I might look to add this trade on. I like this a little bit more. I like the Jade Lizard setup in here. I think either one would work, uh, depending on whether you think things are more bearish or bullish. We just went through all of the charts, and I think we're at a decent, I don't know, stopping point's not maybe the best word for it, but I think we're at a spot here where we could find some ground to hold a level, but we can still go lower. All right, let's get back to these positions in here. So there's ES. I think those are the two best opportunity trades right now, and I don't think a strangle is a bad idea. All right, let's get into bonds. Bonds are pretty much flat on the session today. We've got a strangle here at 41%. That's going to come off soon. So hopefully this thing will hit 50% within the next week or so. IVR is up at 36. It's a little elevated. So if that comes out or bonds, you know, get any kind of a bid underneath them, then I think that you have good opportunities on bonds. So what trades would we put on in bonds? And we'll get back to that gold trade in just a minute. I'm just cranking through some of these trades. Bonds. What do we want to do in bonds? We could look at 112 trades in here, which might be something along these lines. If we did let's just do the 111 version, then maybe we might have to go to 112 to make enough money. And yes, we're going to have to. Okay, so here, geez, we still can't even make any money on it. Okay. Hard setup right now on these. So you're not really going to be able to put something on with like a 112 strain because you just can't make enough money in the tail. To the upside, we could bring these down a fraction more, but still, I don't think it sets up great. The tough thing about bonds and doing like 111, 112 is that you don't have a lot of strikes and your widths aren't great. Okay, you need to get some widths that are half a hick or something like that. And I think, and these just don't set up fantastic. Okay. So it's not the best setup in here. For this, we talked about a strangle on here, which means I could go out maybe closer to here, put something on that looks a bit like that. Okay, so how's this strangle look? Pretty nice. So 297 bucks on this thing is what we're taking in with 19 ticks. So roughly $300, 297 on 1463 in margin. It's a 20% return. which would mean if we take 50% of this thing, we'll make a 10% in less than 3 months. It's a pretty good trade opportunity. I think this is not a bad play on bonds. Now, we're already in some bond trades, so I don't know that that's going to be the best opportunity for me. But if you're not in here, uh, I think this is a good opportunity to strangle something like that. All right, there you go. There's a handful of different trades. Now let's look at gold really quickly here. Markets are still just lows of the session, doing nothing. Uh, I got a I got a zero DTE trade here that's down $10. So we'll see. How much farther do the markets fall? I don't know. We'll see. If it is what it is on that trade. And then our SPY trades, these are all our nakeds in here. The nothing to do on our covered call. That's fine. We've got $400 worth of extrinsic to go on this thing, and we're actually positive, and uh, we're just underneath it. So it's not a bad trade. We still have 3 days to go on that, so we'll be fine. Nothing to do there. Let's look at gold real quick. One more trade on to put on. And yesterday I tried to get in with something that was more like a jade lizard setup. 112s don't really work great because of the strikes and the widths. Although if you can get some 5 wide, you might be able to get it to set up a bit. But let's find something here around, I'll say 2750 on gold. Gold's off to the races. I think 2750 puts us below some support levels, so I think that's fine. We might even be able to go higher than that. And if we take a look at the top of the expected move, I want to go to a 5 wide. So let's go here before we get into the tens, and let's just see what this thing looks like. Can't even fit it on my screen, probably. There we go. All right, so here's the gold. Let's see if we can get it to look at it a little bit easier. And it's hard to get. So here's the jade lizard on gold. 2750 puts us down quite a ways from here, 300 points. It's a 10% down move. Gold is breaking out. We have no risk to the upside. If we get in the tail on gold, we make 360 on 55.27. That's a 6.5% tail, okay, on this, which is not bad. Let's talk about this. We are 6.5% tail. And then if we look at the trap, we're at 860 on 55.27. And that puts us at around, what, 16% in the trap, okay, which is not bad over 70 days, just over 2 months. We might get out sooner than that. I think this is not a bad setup. We could even probably pull this up a little bit more. What were we at a second ago? Now I even lost track of it. What was I? 2750, I believe, is where we were. I'm going to take a screenshot of this one just so I can remember what we did, and then we'll see if we can maximize the look of this thing. And I still think we have pretty good support around 2800, so we might even move this thing up a little bit more here. This now pays 530 in the trap on 6089, okay, which is now close to 8.7, almost 9% in the tail. So I do like the setup of this better. And then it pays $1,000, 1,030 in the trap on 6089. This is more like a 17% trap. Still not great in the trap. Not as good as some of the other ones, but I think this is a good trade. Okay, I like this. You can play around with your naked puts, figure out what you want. Gold looks really bullish here, and I think if we continue to the upside, this trade's good. Now, what I do like is at this 3,200 level, on it, 3,200 is well beyond the 3 ATR. Uh, and that's on both the weekly and the daily. So we really have to get cranking beyond that. So I think this range here is not bad. It's not something I would strangle because I don't want the risk to the upside, but I do like this trade here on gold. So I think this is a good trade opportunity. So there you go. There's a bunch of trades in here right now that I think makes sense for us. All right. So there we go. I've got, like I said, a zero DTE trade on, and now it's up 300 bucks. All right. So it is what it is. We just keep making a little bit of money while we let the rest of our trades work out. We don't have anything that's nearing a loss or anything that's a concern in here. So we've checked out all of our trades. We've come up with, two, four, six trade opportunities uh, out here. So I think you've got plenty of room to rock and roll here. So hopefully this was helpful for you guys. I will we posted all of the screenshots in the main Discord here, and I will go and explain which ones I'm going to do, if any of them. We may tweak them a tad more before we put them on, but there you go. You have a handful of trade ideas. Hope this was helpful to you guys today. If you have any questions, I don't see anything in the chat, so I think we're good to go. I will. Um, I'll let you guys go. I'll put video back on. We'll get out, and we'll wrap it up for today. All right. So good stuff, everybody. I hope you got some great trade opportunities and ideas. There's nothing to do out there except just keep letting theta work. We're not in any panic situation. I think this down move today certainly expected. I don't see any reason to get ultra long here and look for a bounce. I think you just play the market that you see, and it's just weak. I think you got 2 more weeks till the April 2nd tariffs. I think you're going to see chop until then. If we get some clarity there, if we get anything from the Fed tomorrow, which I really don't expect anything to happen tomorrow, we just keep making trades. We booked some nice trades this week already. Yesterday we booked a little over $2,000. Last Friday, 1,100 bucks. Last Thursday, $2,000. Last Wednesday, 1,400 bucks. So, in the last 4 trading sessions alone, we booked 6,600 in realized gains. We'll just keep doing that every day as we trade through and let our trades work out. All right. Have a great rest of your day, everybody. We'll see you guys in the Discord. Take care. Bye bye.